it was just, I made a lot of money on the way up, got clobbered on the way down, and it was like either there's some other explanation that I'm blind to, but if the main reason it came down was just because your hammer leverage in that fashion that we just described, that's what made me think if that's accurate, then that would be a floor. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And fortunately, it is silver option trading time here on the Arcadia channel. Did another call with the Market Chameleon guys a few days ago. They have kindly allowed me to rebroadcast that, which is what you're about to see. A quick disclaimer, by all means, this is not the same as storing physical bullion somewhere safely. Much different risk profile, and probably not appropriate for most people. This was my background as a trader on the American and New York stock exchanges for Susquehanna International Group. So it's fascinating stuff, which is why I share it. And in the right hands and guidance, it can be a lot of fun. But just want to make sure that's clear. You'll hear a couple more disclaimers in the beginning. But with that said, I think you'll enjoy watching it. And here you go.
Going live on YouTube in.
When Chris takes over the screen share so that you can see that photo of helicopter Ben.
All right. Yep. We are live.
I'm gonna make figurines like that. So Will, you could have a paperweight come right on your desk of Ben Bernanke throwing out $1,000 trillion bills. Did you know that they were actually serious about those $1 trillion platinum coins, minting $1 trillion platinum coin?
Is that true?
I thought they were joking, but it turns out they were serious. And in March, some congresswoman actually reintroduced the proposal.
It's amazing. Everyone who's joining us on YouTube, we're going to be on with Chris Marcus right now. You're seeing a little of the back, what's going on backstage before the show. We're on YouTube live before we start the webinar, so just hold on. Chris has some interesting things going on. So he's thinking about, what was it, minting? You're molding figurines, Chris? Can you explain that?
Before that, Will, I'm going to slip into something a little more comfortable.
Uh-oh, geez. I don't know if that's appropriate.
Wow, if my thing hadn't frozen, I had my timing so slick. Is my picture frozen?
Yeah, it looks frozen to me.
Oh, I was trying to hop into my silver vault and I broke Zoom.
Uh-oh.
Slip into a more comfortable.
All right, it's now, we're about 5:58. Do you want to start the broadcast, gentlemen, or hold off for 2 more minutes? What do you think?
I want to clarify. That's what I was saying, Will. I'm going to slip into something more comfortable, and then if it had gone perfectly, you would have seen the silver vault right then. So, although just to make things a little bit more appropriate today, we will go by, this is Chris's Susquehanna option post. See my $1 trillion Zimbabwe note I had there?
I love that. Yep.
That's Fat Frank, and that's Tony Pensavalle. Big Edgar Casey fan. So yeah, this is like we're coming to the op front, like straight from the option pit. But yeah, Will, you just think about when you have, we could get super helicopter Ben figurine of that too. I'm getting requests for these every day now.
Oh, that's great. That is
so
funny.
You can have Ben Bernanke throwing cash. See, the original product line started with having Ben Bernanke working a printing press in silver figurine form like this.
We're starting the broadcast now, Chris. Chris was just giving us some backstage highlights. If you were on YouTube early,
it's more important than options, Will. There's some things that are bigger.
Yeah, that's funny. Thanks for joining us tonight, everyone. We have a special guest, Chris Marcus, with us today. He's probably the foremost expert I know in silver, the silver trade, options. He traded on the floor back in the day when Dimitri and I did, and a super knowledgeable investor and bar none, the best silver trader I know. Before we get started, D, do you mind if we go to share screen and get that disclaimer up? You want to read that disclaimer?
Yeah, yeah, definitely. So everyone, just keep in mind, we are not registered investment advisors or broker dealers. We're not telling you what to do. We're just sharing ideas. If you need help from a professional, then go out and seek the help of an investment advisor or call your broker. There's a disclaimer, everyone. With that,
there you go. Now, a couple ground rules for tonight's show. We are streaming live on YouTube, and we're also on Zoom. People are joining us in both spots. If you're on Zoom, please put the questions in the question and answer. We'll get to it at the end. I'm going to launch a poll right now asking you if you've ever traded silver, and if so, what have you traded? The silver miners, a futures position in silver, an ETF, SLV, or are you like Chris and myself who put coins and bars under our mattress? Let us know. I'm launching that polling right now. Dimitri, why aren't you in your vault?
I forgot to bring my vault.
You can see
I was doing the options today.
Yeah, that's right. All the money's gone.
Yeah,
all the money went from Dimitri's vault to my vault, and you got Chris
on
transfer. Yep, you got Chris on the floor is that the American Stock Exchange you're on, Chris, today, or is that
no, that's after moving over to the New York Stock Exchange. And that was the Amerivest booth right in the background there. And we had a well, I mean, how are you supposed to like brokers? I don't know if that's possible for anybody. I mean,
yeah, no, brokers didn't have a lot of friends. So we do have quite a few people join us. As of now, 35% of the people have traded SLV, and 35% have coins and bars under the mattress. So there you go. And
we know where you're storing yours, Will.
Yep. 95% of the people polled have traded a silver position. So
got any platinum in there?
I didn't have platinum, but if you're in chat, let us know if you trade platinum at all. So Chris, why don't you get started?
Well, sure. I was thinking about it. Thank you for the kind intro. Thank you for having me here again. It's great to see both you guys, especially now that we've seen the silver price move. I was thinking when you said the foremost silver traders, so whatever the way you described, I was like, geez, there's got to be somebody else out there. And I guess I've been thinking a lot recently, where have I been successful trading silver options? Because it's a very different thing than, when you guys were market makers, and that's what I was, where essentially we're buying volatility, selling volatility. I actually miss being able to be short vol. I have my retail trading account now, although I miss smashing a bid. That was fun.
That was fun.
We actually had this thing with Susquehanna. It was called sniper mode. And it was like, it actually would form a bullseye on the screen. So it was just so much fun. It'd be like some of those slow Friday afternoons, you just like take it in bazooka. And so you all right there, Will?
Yeah, no, I'm just losing my eyes.
You looked like someone was walking off with one of your silver ounces or something. Someone's in the bedroom. Get him.
I'm changing
Well, Will's broadcasting. Get him. I guess the getting into silver was kind of what led towards my exit from Wall Street. Fortunately, I wasn't thrown out. I actually got to leave on my terms, which was nice. And I mean, it's a much different, we were market makers, we were trading customer order flow. I didn't know that much about, we had I think I had 600 symbols by the time I left. So, I mean, it's like some of them, I didn't even know what the ticker stood for. But it's, it was market making, trading spreads, trading vol, which is a lot different than silver, which has been a much more fundamental quest. And part of how this all got started was that back in 2011, following when Ben Bernanke announced there was a note in our morning trader notes I'd say September of 2010 that Bernanke was going to launch QE2. And by then, I'd been trading options for a while, I'd been studying gold and silver. I personally thought and still wonder if the dollar was going off the tracks back then. So I did have some GLD and SLV positions on the way up. I did not sell at the top, unfortunately. I'm not sure if I really regret that. I mean, I guess, if I knew the price was going to drop, I would have put something else on. But to the degree that was what really led me to start studying whether there was something other than free market pricing going on in these markets, because it made a lot of sense why people were buying silver and driving the price up. The U.S. was getting downgraded. I mean, it was a complete debacle over the debt ceiling, which, by the way, I love how they just, used to be like we hit it, they'd like extend it a couple months, they'd commit accounting fraud. What does it mean when you hit the debt ceiling and they're like, we're going to take unusual, extraordinary measures, and now we don't hit it till 6 months later? I don't know. That sounds like accounting fraud. But these things, you had the Tea Party, QE2, and the metals were soaring, and seeing them get hammered, especially seeing gold get hammered from its previous all-time high, which will, as I think you're aware, we're not talking about one day anymore now. Gold, since the last time we talked here, now in all new record territory. And what really stood out to me back then, though, when gold had crossed 1900, people were really questioning the dollar, the U.S. Treasury, and on a Labor Day Sunday night, the Swiss come out, peg what was considered the last safe haven to the euro, which I thought was going to send gold soaring through 2000. Instead, it got beat up in the middle of the night with one of those big block offers. And actually, Will, I got a question for you, if I may, sir.
Oh, yes. Give it to me.
In fact, I will, I think I can pull it up in a minute, but it's like when you were selling or buying anything, if you have a big position, do you do it when the liquidity is the thinnest and it will move the price? Or, you would kind of try and do it subtly. So like if you're selling something, so it doesn't destroy the price, right?
I would certainly try not to destroy the price. Fortunately enough, Dimitri and I were never big enough to affect the price.
Yeah. Well,
we're no Susquehanna.
Yeah. My feeling would be that you would not want to be bigger than the market, and you'd not want to move the market.
Yeah. Well, that was my feeling too, Will. And I'm going to see if I can I found this great app on my phone now where you can actually look at, and there we go. You can look at the price of commodities and then at the same time look at the volume, and you see it. I mean, you read reports about it. I bring people on my show who trade it and talk about it. And I don't know why it took me this long to actually find a decent chart where I could look it up. And in a minute, I will pull that up. But I mean, they just hammer whatever bids are out there with just massive amounts of paper, gold, and silver that, are exponents beyond what even exists. And that's why basically I left Susquehanna, continued reading about silver, but started what I've been doing here at Arcadia. Essentially, the book came about as an effort to see if I was missing something, because to me, it's like if the only reason the price dropped, now, again, I believe there's some energy and some equilibrium to a market which can get drastically pushed out of line. I mean, look at our interest rates where Fed calls it policy. I mean, that's a nice, clever title for bond market manipulation. But to me, it's like if natural demand is what it is and you distort that with something like, for example, this. I mean, look at this whopper where, this was, I believe, this actually might have been the Fed day last week. But I mean, look at this. You see the price rallying, and then, right as it just drops right off a cliff. I mean, look, you see the volume, and you don't have to take my word for it. Just look 10 minutes later, you see the same thing again. Anyone who's been following the metals for any period of time has probably seen this hundreds, if not thousands of times. In fact, you want another fun one, my friend?
Now you're saying that spike in volume there, are you saying that's the Fed coming in and liquidating, or who's
I'm not
getting that
saying
hit?
that's the Fed. I would guess that's probably an investment bank, maybe like JP Morgan, that the Department of Justice took the unusual step of publicly labeling a criminal enterprise. And we've already seen several of their traders confess, plead guilty to spoofing the markets on thousands of occasions with the knowledge of their supervisors, and that it was widespread practice within the firm. So, I mean, this stuff is not. Again, I had Bart Chilton on my show last year where he confirmed JP Morgan took over the Bear Stearns position. It was over the limit. They made it bigger. Coincidentally, at the time when gold drops from 1,000 to 700, silver drops from 21 to 9, in the middle of Lehman Brothers failing, in the middle of Bear Stearns failing, coincidentally happens within days, not a week or two after that deal, but and this is the exact time we find out these clues later on. So anyways,
this is all covered in your book, correct?
Yes, sir.
Yep, there you go. The big short.
So Chris, why would they want the prices of gold and silver lower?
Well, my guess on that one is that the banks actually, Dimitri and Will, I got a great chart pulled up for you on this one. I just finished today.
You can't hide from that question, by the way. You've got to come back to that.
Oh, well, I'm most certainly excited to do that, because I actually talked about that in a video I recorded today. The short answer is because they make a fortune doing it. In fact, I'll give you this one. Will, let's say I tell you that with 100% certainty that any equity that has listed options is going to move 30 cents over a 5-minute period. I'm going to tell you exactly when it is, and 100% it's going to happen. Is that almost the equivalent of unlimited money if someone is front running that?
It sounds that way.
So, all right. My thing's a little slow here. In a minute, I'll pull it up where you can see that the banks would get really short, and then the price would fall off a cliff. They'd start getting long, and that's when it would rally. Let's see if I can get my screen share here, because you don't even have to take my word for it. Here is the barchart.com. Thank you guys for this great site. It's right up there in greatness of websites with marketchameleon.com, which I use for my option trading. You like that plug, Will? That was pretty smooth, right?
Yeah, that was nice. I appreciate that.
So you see up here in the black line, this is the silver price. And this red line here is how much the banks are short. So you see short position gets bigger, their price goes off a cliff. They start buying it back and get flat, goes up. Then, you travel a little forward here, stays flat there in the price, but they get short here again. You get this nice cascade down. Then they're flat, price starts going up. They get short again. You see this. Now, it's interesting how, and Will, one thing we'll get to, there was actually, I would say, a breaking development last week where we saw evidence that it appears some of the shorts may be finally running for the exits, because that pattern is continued where normally as the price goes up, they would get more short. But we saw that price spike in price over the last 2 weeks. And the latest report shows that the banks actually bought some of those contracts back at a higher price, which has not really happened before. There's been other news reports and anecdotal evidence suggesting that some of the banks are running for the hills. And, you know, it makes sense when you see on the COT report that a collection of the 4 largest short traders are short 248 million ounces of silver, which means that those 4 traders, presumably banks, lost a collective $1 billion when silver went from $20 to $24 in the span of 2 weeks. You know, you've seen the price of gold come to the 1980 levels several times before, again, not my definition of a spoof, but former CFTC Commissioner Bart Chilton, his definition of a spoof, where again, we see, you know, the same thing that we were just looking at a minute ago in this chart. So, I mean, you have people pleading guilty to the Department of Justice, CFTC confirming that, you know, what you see on the chart here. But I mean, that, I guess, is the basic premise. And back to where we started with all this, you know, I didn't know this was how things operated back in 2011. I think once, I know there's some lawsuits on hold until the judge rules. But I mean, I think a lot of people who bought gold and silver in 2010, 2011, I don't think they were wrong on their trade. I think we're seeing the evidence of a series of felonies. So from that standpoint, I mean, I guess I got clobbered and lost that back. I'm trying to change that and rewrite history this time. And especially with the way we're seeing a run on the COMEX metals right now, which really, what is ultimately going to end this is when enough people say, I want my gold and silver in the physical, not a futures contract. And we're seeing a run on the metals, unlike even in 1980 or 2011. Next silver delivery comes up in September. So turning over to the options, I've been, especially on days like today where the price is down, I don't think I got filled on anything today, but I have, oh, Will, would you like, can we run another poll?
Mid, I don't think we can run mid show polls.
Okay.
I can ask a question and see what the people on.
If anyone wants to take a stab at this one, in 1980, when silver made it up to $50 per ounce, right?
How much was it per ounce?
Got up to $50 per ounce.
All right.
So do you know how much time elapsed between when silver hit $24 on the way up and when it hit $50?
My gut says a short amount of time, but
it was about 24 days, I believe, December 14th to January 18th, maybe 25 days, less than a month.
So it was parabolic, the move, very quick.
Yeah, which I find is interesting, where it's in the last couple of weeks. I mean, silver just jumps from, and I can pull up a silver chart.
So 50 an ounce, where would that put, if someone trades the SLV? Because we've had a lot of questions. We're going to have to look at the SLV at some point on the Chameleon. But where would that put something like SLV? And I know you're not a huge fan of the ETF.
SLV, at least, unless they have some sort of scandal, which I hope is not the case. I do think there's some risk premium there, and typically trades $1 lower than silver.
Gotcha.
So it's supposed to track it on a one-to-one basis. They're supposed to put metal in there. Again, JP Morgan's the custodian, so I don't know what.
And I think that's the risk that you talk about maybe in your book. I have to say I haven't read it cover to cover yet, but some of the risk of SLV is actually, are they putting the correct amount of silver, basically bars, into the ETF as it's being purchased? Is that correct? That's risk.
Yeah, well, that's certainly, I mean, that's the primary risk, although, you know, I have this little theory that when you interact with people who are honest and who care about you and look out for your best interests, and they try and find deals where everybody involved benefits and gets a good outcome, you spend time with people like that, probably even if you're a complete moron, things are going to work better than if you're the smartest guy on the lot, but you're around people who are constantly trying to cheat you. And I mean, JP Morgan, I think it's at least, I've heard 30 to $35 billion worth of fines in the last couple of years. Again, we have the confessions, the evidence is there of their involvement in the silver market. So I very much hope that they are legitimately putting the metal in there, and that now I know retail investors can't redeem it. I think it's in like 50,000 share lots, maybe. You know, I've gone through the prospectus. I actually have called iShares. They claim they deposit metal. I hope they do. I hope they're not going to have a bad outcome for the people in there. Although I talk with a lot of silver experts who think, and mining executives who feel it's physically impossible that they could be adding as much metal as has been claimed to be put in there in recent months. And why don't we, I'll pull that one up real quick, because for folks who haven't seen this.
So what you're saying is that SLV ETF, if somebody wanted to and had enough of those units, they could redeem it and exchange the ETF for physical metal.
I think authorized participant, maybe that's not the right word, but there's some fiduciary that in the prospectus, the way I read it was that, and I think it was 50,000 share lots, that they can, you know, convert that to physical. I mean, you know, if you have like, you know, 3,000 shares of it, I don't think you can go in and do that. And we can take a quick look here.
You have to be an authorized participant. So basically, you can't do it as a retail trader. You'd have to be like either, you know, a market maker who's an authorized participant or someone. Now, does that go the same way if they're creating a unit? What if they're creating, not redeeming, creating? Do they have to actually put up the gold? Or
they are supposed, the person from iShares, I actually called to see what they say. I didn't know that it makes me feel more confident, but they said I had them on the phone. They said, yes, they add silver. And here you can see this blue line shows the number. Now it's SLV. There's a bunch of other ones too. So it's not only SLV, but you can see this blue line going vertical. The bars at the bottom are showing you the weekly additions. This one was a record setter 2 weeks ago. I mean, you're seeing a run on the metals. You know, to put it in perspective, this is the last couple years. You can see there's some heavy activity there. What's fun is you can go back. It's even better when you put it 10 years in perspective. Again, I'm shooting a little slow here today.
AD, we're getting a couple questions about who audits the ETFs. It would be the SEC, correct?
I'm not sure who audits it, but take a guess who's the custodian for SLV.
JP Morgan.
I mean, maybe they could paint like a wolf costume on the JP Morgan logo on the prospectus, put some chickens next to the silver bars to make it more ridiculous. Check this out, where if you can see the gray line here, this is when silver hits $50. And I mean, this is the most unusual supply and demand chart I've ever seen, because here the price goes from 50 all the way down to 15. Meanwhile, look at the metal being deposited in. I mean, you could say it almost goes at a 45-degree angle. Now it's going vertical. So, you know, anyone who says that the COMEX paper trading has nothing to do with it, you know, I don't know if somebody else can explain this. I've been searching. I mean, I tried to find a counter argument for the book outside of Harry Dent, who I would disagree with his definition of deflation. I mean, I invited him on. I don't know of anyone. I mean, would you say I've made some bold claims and I've been assertive about them in the time you've known me?
I mean, listen, Chris and I got together years ago, and he started, just so everyone knows, he's got a great YouTube channel, Arcadia Economics. And when he started, I think his videos, I was, you know, maybe within his first, I don't know, 50 videos I was on. And I think maybe we had 100 people who watched it, maybe. Now, what do you get? Like 20,000 people watch your videos when they go live. I mean, he's got an amazing following. So he's hit a nerve to the silver community. That is for sure. But one question Dimitri's still waiting for. Why are the banks, why do they want to be short silver? That's a question Dimitri asked. And did you get the answer, D, or do you want that answered?
We did.
Oh, we did?
That was when I said, well, what could you do if you knew when the price of the asset was going to move? If you can move the price up or down at essentially at will, then the banks are making a fortune doing it.
So you're saying the banks, they may not have a short constant position, but they're trading it.
That's why I showed that graph. You saw, I mean, it's more short than others. It got close to flat several times.
Gotcha. So they're trading it, and
I mean, it's like it's great if I can buy the thing, make it go up $2, then carpet bomb it, make it go down $2 in like a ping pong ball, and just.
Right. I got you.
I mean, they're holding the customer book. They have the stop orders, and and we know they're front running the options too. I mean, it's insane. So yeah, I don't think JP Morgan. I mean, now I guess you could say it's easier to do it from the short side, and I mean, I think it's simple. They're doing it because they're making a lot of money doing it. I think it's clearly illegal and against anything moral that I ever would have thought to do. But so hopefully I answered that one now.
No, that was good. That was very good. We have some options questions about silver stocks. You want to try some of those?
Yes, although just one last comment, if I may, where, it wasn't the size of the audience or anything like that, but more just what I was getting at was that I've tried to find a counter argument to this. I mean, if anyone out there knows someone from JP Morgan that wants to come on the show and tell me what I'm missing, I would love to talk to them. I'd love to talk to and I can't find someone else who can explain it in another way. So
there's the challenge, chameleons. If you know someone who wants to debate Chris Marcus on,
can we get, let's get a JP Morgan. Somebody I've tried.
I mean, how many shows have you done? I mean, you've interviewed just about everyone in the silver world, haven't you?
If the Easter Bunny can explain it, bring him on too. I mean,
I don't know the Easter Bunny, but if anyone from JP Morgan wants to answer to Chris Marcus and talk about the trade, it would be an interesting show. And I don't
have to answer. Maybe if they could just explain it to me. I don't lightly accuse people of stuff.
No, I mean, and really it's all in your book, all the research, the accusations, and we're going to give away a free copy of that book, aren't we? Somehow
we are, Will. We'll give away multiple free copies today. I don't know, maybe even have some junk silver here. And Will, I'll actually be back east probably in October. Maybe I'll be able to swing by and say hello, and also trying to find if anyone knows anyone on the COMEX that I can get in there and snoop around. I'm working on getting that set up.
Wow, I'd like to join you from there. Can we do a show from the COMEX?
I'd love to. I mean, this was never based on me trying to convince anybody of anything or anything other than it was just, I made a lot of money on the way up, got clobbered on the way down, and it was like either there's some other explanation that I'm blind to, but if the main reason it came down was just because your hammer leverage in that fashion that we just described, that's what made me think if that's accurate, then that would be a floor. And turning to the options, I don't really know how you trade it short term when you don't know when the carpet's going to fall out, but I have really been trying to just keep it simple and pick some educated spots. I see elevated risk of perhaps a failure on the COMEX in these next delivery cycles. We're seeing record gold demand as well. So I don't know, and if you have options on and just leave them and don't get too cute and you're in a broader rally, it's going to go well. And again, along the lines of your disclaimer, Will, by all means, this is highly speculative. This is not the same as buying silver. So I want to be clear about that. I'm not giving financial advice to anyone. I don't know everybody who's out there, but I'm just sharing my own experience. You know, if you structure things where you take some of the guesswork out and then you do hit on the timing, you know, things can go well.
I mean, this book was written because you were in search of answers, is basically what it comes down to.
Yeah.
There you go. I'd like to show a video from our last show. May I?
Please, yeah.
Dima, you ready for this? This was a lot about you.
This in a 30-day risk reversal. So if you bought a 5% out of the money call, sold the 5% out of the money put, that costs a good 2% debit. In other words, if this, think of a stock as 100, if you bought a call that's 105, sold a put 95, you would pay 20 cents. So it's a debit.
So that was, we were looking at AIG because there were a lot of questions. Excuse me, AG. I don't know, D, if you can look at AG now, but we do have a bunch of questions about AG. I don't know if it was people from the last show or.
All right. Should I share my screen, Will?
Yeah, share your screen and we can walk through it. And Chris, you can certainly talk. You were the one who mentioned First Majestic.
I'm actually wearing my First Majestic silver shirt today, Will, if you can see that. I'm actually quite fortunate these days. First Majestic is a sponsor of our show, and Keith Neumeyer was actually the only mining executive that appeared in the big silver short. Largely, I have a lot of respect for him in addition to what he's done with his company, but also he spoke out about, you know, the manipulation. And it's interesting. They've actually been withholding some of their silver production when the prices got hammered. So there, you know, is the benefit of having someone who's aware of that. And anyway, so we can take any questions on that or any other stocks. I see Dylan has a question too. We could take if you'd like.
Yeah, we'll go through them. But so D, so AG now, it was the debit.
Yeah. So when that video that you showed, sorry, go ahead, Will. Did you want to?
No, you've got it. Yep.
Yeah, so I think that the last time you were on, we looked at AG, and the reason we were doing that is because you're saying that the miners themselves kind of have this like accelerated leverage, right? Because as silver goes up, their margins are expanding really quickly, right? So they go from making $1, you know, to wherever silver is going, 2, 3, 4, you know, so it's like an exponential growth. So you reckon. So you're looking at silver companies, miners because of that. And we, on top of that, we looked at a leverage bet on a leverage type of, you know, using options. And one of the things we looked at was the risk reversal, which is basically buying upside calls, selling downside puts, right? So if you're buying upside calls, you sell downside puts to kind of finance that. Of course, it's kind of like you're just getting long. You know, at some point it crosses that strike over here to the upside. You're at expiration, you're like long stock 1-for-1. If it crosses the strike to the downside, you're long that, you know, you're kind of like long the stock 1-for-1. That's how the option behaves. And then you got that little gray area that if the stock closes in between the strikes, both options expire worthless, and you're either going to make or lose depending what you paid for it. If you got a credit, you make money. If you paid for it, you lost that. But the last time we looked, that stock was what, like $9. So this is up 40%. Well, I forget the videos, 950, something like that.
It was like $9.
30, right? The risk reversal back then looked like a good, I think from the video, that cost was below.
It was 0.2.
It was 0.2. Now we see how, as demand is growing, now we're seeing people paying up. Right now we're at 0.7. In other words, on average, if you put that premium, it cost you 0.4 of 1%. Now it's 0.7%. So we saw both that, except the stock go up, that risk reversal, make money. Now the demand is growing for that, you know, buying upside calls, selling downside puts. So that's how the skew looks like now.
Yeah, it's pretty interesting.
Yeah, and just to show really quick what that looks like on an options chain, let's just set that up. I'm going to go here 30 days out. So I'm going on to September 11th. So if you find like I can't even find the 5%. So let's say something like this. Let's do, this is 7% out of the money. You buy that, go out, you'll do like 8% out of the money. So this is what it kind of looks like for people who haven't seen a risk reversal. So as you see, if it breaks through to the upside above that 14 strike, you're paying 28 cents debit right now. Keep in mind the midpoint 17 cents, but it's got to go above $14 and cover that 28 cents. And then you're just making money 1-for-1 with the stock. If it just sits here in between the strikes, you know, both options are worthless. You lose this 28 cents. Below that 12 strike that you're short to put, that acts as 1-for-1 with the stock at expiration to the downside. So instead of just getting long the stock, it's a little bit different. You're picking strikes where you want to get long and short. Again, but your total outlay is less than if you just bought the stock from the start. But that's what it looks like now.
Very cool. Chris, what are your thoughts on AG right now?
Well, one thought on the skew, if I may. Can you pull the option chain back up, Dimitri?
Yeah.
So with the stock right around $13,
Yep.
you know, a simple way of looking at that, especially when I think it's 1301 was the close there. So, I mean, you can look at $1 out of the money put, $1 out of the money call, which on typical stocks, the put is going to trade over the call. Whereas here we see the 12 put, let's call it 75 cents. And the $1 out of the money call is, let's call it 90 cents. So that's typical for the silver stocks, especially when they're moving. Not typical for the majority of stocks. And then you see the vol. Now, I know the people on your site are more familiar with this, although there's a lot of people in the metal world who don't really realize that they're trading volatility. And so often when, you know, when the thing's rallying, the stock's up, you know, and those upside calls, I mean, they stay pretty expensive. They get hammered pretty good when the thing comes in, because when, you know, and you probably saw that today, it was down 27 cents. So not only, like, if you're buying those upside calls on the days where the stock goes down, you kind of take a double loss because the stock goes down, and you're also long vol if you're long the call. And so the volatility is coming down. So again, and this is very atypical from your normal equities. So again, it's, you know, not the easiest thing, but again, a day like today is ideally the day when you'd want to buy something, because you're getting a cheaper vol and a cheaper spot price. Tricky thing is that I know, you know, I hear a lot of people say, well, you know, silver rallied too fast, it's going to pull back and correct. That's the part where, I mean, it's cost me some money over the past couple of years where, you know, I've thought, well, I want to have something on because one day this thing's going to explode to the upside, in my opinion. And I don't know. It's like when the COMEX fails, if you think, well, it's going to go up to 32, but then it's going to pull back. I don't know. Maybe if you can figure that out, and it does. But, you know, to me, the whole thing, I want to capture whenever it finally does go to 50 or when it goes beyond 50, and that's why I've done all I've done studying the fundamentals, because based on that, I think that you kind of almost are going to, it seems like, you know, we're not talking about one day anymore. I mean, it's like gold already a new all-time high. And in terms of like the signs of when the COMEX and this fractional reserve metal scheme could really be on the brinks, I mean, I don't know. Maybe they figure out some way to drag it out a lot longer, but I mean, certainly it's amazing that it seems like it's happening now. And in fact, the only reason why there's any hesitation is just that, you know, even last night on the open, can I take the screen share back there?
Yeah.
There for a minute, Dimitri?
Yep.
Let's get the, 1 second, I'll pull this up. I mean, you can see even the same thing last night on the open where the price spiked up 50 cents right away. And I'll pull up my chart here in a second. And you know, it's like these the moves we've seen recently, they're not an accident. I mean, look at that open, the red line there. This is the Sunday night open, late, you know, about 4 p.m. Denver time, 6 Eastern, you know, is the Far East trading. Spikes up, and then, you know, I bet if you had volume on this chart, you'd see someone hammered the heck out of it a couple of times. So it seems like the battle is still going on. I would say the manipulation on some level is still occurring, because otherwise, I mean, you have silver's at $24. If the manipulation were over, I don't think silver is going to be anywhere near $24. Wish there were I wish you could see like what each bank was doing individually on moves like these. I mean, it would have to be the most fascinating movie ever, and I try and capture as much as you can read what's going on without seeing the actual names, because that's not public. But you know, if you even if it kind of goes slowly, if you have options on, you know, whether it's, I mean, some people are saying which strike. I mean, the farther out of the money you go, the bigger of a multiple you can get, but the bigger of a move you can get. So, I mean, as I've been thinking about it more and more in the recent weeks, I think at least what I plan to do is 90%, like, just, you know, if I have money come in every month or every week or whatever, allocate some portion. All right, you know, some I'll put in just some mining stocks, some I'll just buy bullion, and I'll have some part where, you know, hopefully I'll pick a day, like today would have been a good day, where, especially like with options, it's interesting where you treat it differently than the underlying, where, because again, you have that double factor on a day when it's down, the vol is down and the spot price is down. So in a sense, it kind of resets that option board. But I mean, to me, the biggest key is kind of like if you were short anything in any market in 2008 when the housing bubble collapsed, you won big. You know, if you had the 10 delta, you won bigger. But I mean, in a big move, you know, that's why to me it's like was worth it to leave Wall Street and study these fundamentals and make sure that, you know, you have that coming, because, you know, there's, and I'm happy to take questions on different lines or how a 10 delta would look versus a 70 delta call.
Well, we do have a question actually from Ian D. I don't know if you want to bring up the AG screen again.
Sure.
He's asking, this is Ian.
Okay.
What would be a long-term option strategy is the question. I'm positioned, he's already got one on, but I'm positioned with 90% of my capital, which seems a little scary, but maybe not, in long-dated options on First Majestic for expire in Jan 2022 with the 25 strike, rolling near-dated positions into the Jan 22 options. Is there a better option? And this is for Chris. Is there a better priced option to look at within the miners for long-term positions? So this guy's trading long-dated options, Ian, Jan 2022, 25 strike. He's wondering if
I think it's this strike right here. Let me just take a look at it. So here's like, you know, you got almost 3,000 open interest. The 20 strike, you got like 6,000 contracts open interest. We see like 147 of them traded today. I'm just curious, just to bring it up, you know, for an average volume weighted average price of $2.12. So it's been trading around 2.
Doesn't that seem like a lot of premium for a $13 stock?
Yeah, but that's going out. It's going out like 371 trading days.
Yeah, no,
that hasn't been around that long, right? It just got listed, this strike. Because here's the history I see. You know, it just got listed. It started out with open interest 249, July 23rd, August 3rd. Almost.
I mean, I didn't look at, in my mind, I thought it would be under $1 when we first.
Will, you're quite correct. In fact, if maybe someone in the chat room or if anyone has a non-silver or non-silver mining stock, if we find another stock that's $13, I guarantee I'll bet you an ounce of silver. The 25 strike call probably is going to be no bid. Let's see, on a $13 stock, maybe probably be some bid on the 25s, but yeah, that goes back to what we were saying earlier, Will, where that's how jacked up those calls get, because people know that when silver moves. And I would say it's actually interesting. I haven't gone out to 2022s. Well, as you pulled up that board, I have an account I manage for my mom. And I put some silver miner options in there. My mom's a silver miner option investor, which it makes me happy to say that out loud. So thank you. But I actually like that in the sense that, especially, a lot of this to me comes down to the mindset where, if you're comfortable leaving that there, I mean, I would say you got a darn good shot that this COMEX paper game unravels. That's about a year and a half away. And I mean, Will, and I was mentioning before, we have Silverfest coming up. And one of the topics at Silverfest this year, September 12th to 13th, free for participants and investors to attend. Actually, Will, hopefully we could get you and Dimitri for the option trading. We got an hour at Silverfest to go over silver option trading. So hopefully we can get you guys on board for that.
You send that invite, we will be there.
Yeah, going to be broadcasting live from a silver vault. And so, I mean, one of the topics we have is if silver's trading $50, what is the price of First Majestic? I asked David Morgan, who is known as the silver guru. I mean, one of the most knowledgeable silver experts out there. I think, and I don't want to put words in his mouth, so please don't quote him on this. I believe he said $100. And when you look at
$100 an ounce
for a share of First Majestic.
Oh, all right.
And the quick example of what Dimitri was talking about before, let's say when silver was trading $15, let's say a miner has a $14 cost of production. Silver goes from 15 to 20, it went up 33%. But if the profit margin goes from $1 to $6 when silver goes from 15 to 20 and your cost stays at 14, your profit just went up 6x. So that's a very highly simplified, crude example, but I think I'm actually starting to dig into some modeling on that myself, and maybe next time I'll have a more intelligent opinion on it. But the idea that First Majestic could be $50, could be significantly over 50 due to that leverage if silver hits $50. So, if you're willing to pay that $2 and a quarter, whatever the 25 strike was, I would say if you're okay with the bet of whatever probability you think of the silver market unraveling to the upside in the next year and a half, which I got to update I have this chart here.
So here's how the SLV, the silver ETF, and First Majestic kind of correlated with each other, on a 1-year basis. To kind of see that they move a little bit together, but here.
Your sound.
Will, are you hearing Dimitri as Megatron right now?
You can't hear me?
Yeah, you may want to leave and come back. See if you can.
Oh, really? Okay.
Yeah. All right. Okay. So while we're waiting for D to come back, Chris, did you see that comparison D had up there?
I did. Although, Will, on another note, did you catch my Megatron from the Transformers reference there? I know you know.
I love that. Can you actually do a little silver piece of Megatron? That would probably sell well. Like right next to Ben Bernanke.
A good idea. I'm trying to hold on. Yeah, now as I step out of my silver vault for a moment, This I wrote a couple months ago. This was my own. I'm not saying anyone should follow this. I'm just pulling some of them from my notes. Probability of a COMEX failure. I thought months ago we were over 50% to happen in 2020. I hear a lot of talk about $50 silver, $100 silver, and it's kind of a binary thing. If we get to that point where someone shows up for their metal, it's not there. As we saw in 1980, we're not even just if it happened at the speed of 1980, which is not to guarantee that it will, but that would put it by the end of the month. So again, back to Dylan's trade. Let's say, if silver hits $50, we'll call First Majestic stock price $50. So Dimitri, could you pull the AG board back up and we'll look at the Jan 22 quarter strike?
Sure.
Guys, it's so much fun to be talking options again. It's kind of like coming back to me. I actually got a call from a guy the other day.
Oh, I'm sorry.
Someone who used to trade in my crowd, and it's funny. I hadn't talked to him in like 10 years, but he's been watching the channel. And interestingly, he said he's been sharing it with some of the Susquehanna guys, which I'd be curious. Maybe I'll swing by there and see some of them when I come east. But anyway, awesome. Back there, you see how on the 25 strike, let's call it $2 for that call. So if you think silver, you're going to get X probability. Let's say it's 50-50 that silver hits $50 in the next year and a half. Is that based on, you've heard the fundamentals. We've talked about it enough times. Does that seem reasonable given that we're actually seeing a run on the metals happen now?
Well, listen, anything's possible, right? I'm trying to get my head around this COMEX failure. I think if anything goes wrong at the COMEX, all bets are off, right? That would be very bad.
My belief is that when that happens, it'll probably go well north of 50. But we'll just use based on what you've heard, is 50-50 a reasonable probability for the next year and a half, let's say?
Well, I think just based on, what's going on inside the Fed, that's a coin flip.
I mean, keep in mind that in 1980, gold hit $850, silver hit $50. In 2011, gold hit $1,900 and silver hit $50. Gold's now almost, and I'll give you, this is just my guess, but my personal belief is that once gold crosses 2000, I think we're going to see some wild gaps we're seeing history being made here. So again, and it's fine, and actually it's good Will didn't give a specific answer there. It doesn't matter what I think or what Will thinks. Anybody who's trading, the best trading is when you make your own decisions, you have your own opinions.
So let me ask you this. Could it be that more silver's being mined than gold, and that's why gold is having this monster run and silver's kind of lagging? Is there more silver in the marketplace now?
No, in fact, there's a wild run on the SLV silver as well, and you've had a lot of silver mines actually shut down due to COVID. So in the midst of, you have record retail demand. I bring Bullion Dealer one after another on the show. Premiums have actually started going up on silver products, and Andy Scheckman of Miles Franklin, who I bring on weekly, he's mentioned how in the last 2 weeks now silver products are getting hard to find. The U.S. Mint is backlogging. I think we've seen increasing premiums on everything. I heard another bullion dealer suggest that silver eagles are going to be very hard to find. I mean, it's like Enron where the thing is on fire now. So just for the sake of that example, let's say that there's a 50-50 probability. By all means, if you're at home. And I've actually made a spreadsheet that I'm finishing up, will be available for folks soon. But you can just do some simple things like this where maybe you think it's 50-50, maybe you think it's 10%, whatever percent chance you think. And could you go back to the 22s for a second there?
Yeah.
I'll say that I think it's above 50-50. And So the way that, and if I say that 50, so in that scenario, let's say that 50, if it doesn't hit 50, we'll just assume your option expires worthless. So 50% chance that you have 100% loss, and then 50% chance that First Majestic in that scenario would hit $50. So you paid $2. So if the stock is $50 and you bought the $25 strike, you got your parity is $25. You paid $2 for it. So you'd be getting a 12.5 time return.
If it goes
Pay
to
$2 for something that's worth $25 now. So to me,
well, right now it's $13.
huh?
No,
I thought you said it's worth 20. It's 13. The stock's
this is if it goes to $50. He's saying.
yeah, from 13 to 50.
From 13 to 50, yes.
Well, you exercise that call if at expiration you were holding it and it went to $50 and you own the 25 strike, then so I mean, if you can sit there and be patient, to me, you know, if you're balancing 50% of 12.5 times and then 50% of 0. So I guess maybe that'd be a weighted average 6.25 multiple, not 6.5%, but you know, one time, you know, so imagine if the way I look at it and the way Susquehanna looked at it and the way I would suggest people who are trading options, you want to create the scenario where you're the blackjack table. So let's say you bet $100. If you can make this trade over and over again in different spots, if you bet $100, one time you lose, the other time you win $1,200. So if you structure your bets so that you're not all in on one scenario, but stagger things, you know, whether it's over months or years or days or whatever time frame anyone is looking at, that's why when you have such a big move, to me right now, I'm buying options. I know there's a chance like whatever I buy could easily expire worthless. If some frat boy banker pounds, you know, a massive paper off, that can destroy that particular option at any point. But that's why, you know, the whole thing is like, if you give me 51.49 odds on flip, if I structure my bet size so I can do it over enough simulations, then you can get ahead. And you know exactly what you're going to win, the same way the casino tells you, like, you know, these people play for this long with this many bets. They know exactly how much they're going to make in the long term. One other thought for Dylan. I have not purchased many because especially like days, you know, right now those premiums are jacked. So, you know, if silver gets pounded tomorrow and First Majestic goes down to like $10, which I'm thinking it's getting harder and harder to see big moves down with the way people are pulling metal out, but certainly it's possible. So you would see that option get pounded. But if you have a year and a half to go, are you okay with sitting there and not needing to care what the mark looks like? That's where the mental part comes in. And I think, you know, when I have an account actually has some cash in my mom's account that I've been wanting to put something on. So especially, you know, I might look at a line like that the next time it gets hammered because that's something you can leave. I think it's got, as much as trading silver options by its nature is inherently massively speculative and risky, at least in terms of something on the more conservative side of that spectrum. I would say.
What do you think of doing like a 1x2, like a ratio spread or a back spread? That's where you're like, if it just sits here or drops, you know, you're like here, I just put one up where you're getting a credit. So you're selling here on September 18th, the 13 call, you're buying 2 upside calls on the 17 line, because the idea is if this just goes, it's going to just explode, right? Is the idea that it's not going to move slowly, because here, if it moves up slowly and sits here, then of course that's your loss right at 17. But if this if the theory is that if it's going up fast, or if it goes down, it's just going to go and vols are going to get crushed. What do you think of a ratio
Yeah,
call?
so someone actually suggested that recently, and let's say you did it cash neutral, and the risk to that is that if it goes past the first strike that you're short and stops before the ones you're long, that's where you would lose. But
Right.
to the degree that, yeah, if you get, that you can do it cash neutral, I would map out, it's like, all right, let's say you did the first majestic 17, 18, 1x2. So you're shorting the 17, buying two 18s. You lose when it finishes at 1786 or something. But how often is that going to happen? Sometimes it's going to go down and nothing happens. Sometimes and if you get the big move there, that can be a good way to go. If you have the big move, it's probably a good bet. And I've been looking into those, and I may actually put something like that on. Again, it really just comes down to how you see things moving. Some people don't agree that there's going to be a sharp move. They see more of a gradual rise. Certainly that's possible. And, that's what's nice about options. If you see that happening, you can find a package that fits that. But yeah, certainly a 1x2 could be in the right. You could hit it well on that.
All right, let's get, we've got a bunch more questions. I'm going to cap this at an hour and 50 minutes. So we got to move quick. We're already an hour and 20 in. We have a question about AGQ. Could you make any comment on the leveraged ETF? I guess AGQ is leveraged silver, maybe. Is this a good idea? Do you want to bring up AGQ?
What was I on? Okay, AGQ.
Yeah.
This?
Yep. So this is a leveraged silver ETF, correct?
Yeah. So look at the price of the calls on those. Will you look at are there 22s on there? Go to the Jan 22s. What's the spot price? It's 13.
No,
50.
This is 50.
Okay.
Really, the leverage ETFs, you got to be careful because they reset. They have this daily reset. So you got to really know these are more short-term instruments.
Rule on the street is all leveraged or going to zero.
Yeah, because it's the way that they're set up. People get surprised because you could actually, even if silver goes up, it's the path that it takes that these things could end up being lower. So you could see silver going from whatever double, but if it's very volatile, moving back and forth, this could actually end up being less because of the way that they're structured.
So no one on the panel likes this unless Chris says he does. Chris?
If you tell me silver is you tell me the day the COMEX is gonna break, I'd probably love it.
Yeah, exactly.
Dimitri was correct. I've looked through the math before. It's been a while, but wasn't it kind of like the difference of going up 10% and then down percent versus going down 10% and then up 10%, something like that. And in general, I think it's like there's a drift towards zero because there's a mathematical decay. I apologize if I'm not getting any of these details exactly correct. It's been a while since I looked at it. I think if you can really narrow your time window, look at how expensive those calls are, even the upside ones on that board. Will, you thought the first majestic
I agree.
calls were pricey.
Anytime I hear ultra, I really don't want to be involved myself, unless I knew what was going to definitely happen the next day. This is something for trading in days, not holding a position. In my
I mean, this is the kind of thing that, you know, if you have a quant team and a good handle of when silver is going to go and you have that mapped out, but most people I would imagine are going to get crushed in this thing.
I would agree. We do have, there was an interesting question here about GLD and SLVD, the risk reversal in that. They wanted to see it mapped.
Sorry, what's that?
But they wanted to see the benchmark for a risk reversal in SLV and GLD.
The GLD?
Yeah.
Okay. So this is the GLD right now, 0.3 versus 0.2 average, and here's the SLV. So this one's slightly higher, 52-week average. This one, a little bit more 0.7 versus 0.4.
There you go.
Yeah. If you want to see, you know what, let's take a look at this. So this is 0.7, looks to me like what the high was up here. Let me hover over 1%, 1.1% in the last 52 weeks. So that's where the high was. Let's see the low. So low looks like a credit of, so it's a credit. For some reason, my mouse won't hover over it.
Looks like a credit of point.
Like 0.2, yeah, like almost you could do it for even money or a little bit of a credit. So that's the 52-week range, the high low. Here, let me take a look at the 90 days out. So the 90-day out, that'll cost you 1.2% debit versus an average of 0.9.
Interesting.
So it's high, so it's moving up. I mean, there's a demand for some upside. That's in the
silver's been moving higher. So there you go.
Silver's been moving higher. So we see that here's the chart. You see the risk reversal, the cost of it has been moving higher.
Yep. Someone else chimed in with a question which kind of gets back to the AG 22 leaps. They're asking if you own leaps and want to maybe sell some shorter dated options against them. Is that something you would look at doing potentially?
Was it an AG?
It was just a question. The question was, wouldn't it be better to buy a leap and sell calls on a weekly expiration to cover and make the premium? That was the question.
I mean, it depends on how you think. If you think it's gonna make a big movement right now, then probably not. If you think that, in next wherever you're selling, it's just going to sit there, then yes. Because whenever you're doing long dated options and shorting the near term options, you're getting short gamma, right? You're short gamma, long vega. That's what your position is. So here, I'll show you here. Here's what it would look like. Here's August 13th. Let's just say you sell a straddle there. Right, and then you come out down here, right, and you're buying this straddle here, or sorry, it doesn't have the 13 line. Let's just say the 15 line straddle. So this is what it would look like. So you could see here, if you're getting a big move, that's what it's like at that first expiration. And on top of that, you're long vega, right? So
yeah, but they're really looking at time spread, right?
Well, that's a time spread.
Yeah, you're right. It is. It's buying 1 month while selling another month. Yeah, you're right.
Yeah, you could do a call spread. It'll look the same, right?
Right.
So even if you did the call spread, bought this and sold whatever. Let's say here, August 28th, the 15 line I did, sold this for 40 cents. You're still looking at, so you're looking at a big move. If a big move happens, at least here, let me see if I could do 30. So big move to the downside, you'll lose, right? Big move to this upside, you start losing, especially if that volatility comes in. So let's just say this vol comes in. If it goes up, you'll do well, but let's say it comes in to 50. Let's put that 3 standard deviations away. So over here, like you'll see, that's how it's going to look. Downside, you lose. This is your sweet spot, and kind of what's starting to lose as you go up.
Yeah, the problem with this time spread is I mean, there's maybe no problem with it, but if you're reading Chris' book and your thesis is that this thing could move, you don't know when that front, everything you're planning for may be completely taken off the table if you're trying to use options for the leverage to take advantage of an upside move. It's a different type of strategy. I mean, we've been going for an hour and 20 minutes right now, gentlemen. Is there anything else you want to leave us with, Chris?
What's that, Will?
Anything you want to leave the crowd with? Any parting comments, thoughts?
Well, I guess with just that last trade, I mean, that looks like more of a vol bet if you're doing a calendar spread. So,
yeah,
if you knew, I'm not sure that for this situation is what I would use. I mean, even if you thought you knew that the silver wasn't going to move, if you were that sure that, because if you have you buy the long dated call, sell the short dated call, that if the silver goes to 50, that spread goes to 0.
Yeah.
So,
yeah. If silver goes to 50, that spread is going to, you're going to probably lose money, right? Because the time premium decays in all of them. They all go to parity, right? If you're paying, whatever, just $5 for one and you're getting 40 cents for the other, if it goes to 50 before this expires, then all these go to parity. All these options go to parity. It will, so you'll lose that, whatever you paid for, 460.
Yeah. So, I mean, maybe if you were certain that silver was just going to sit there at $24 for the next year and not move, and you can sell that call, watch it go to 0, and then, but I mean, I would even suggest, I mean, if you knew silver wasn't going to move for the next year, then why not just short that straddle? Why pay the decay? I mean, you're still going to be long, you'd be long vol on that spread because there's more vega to the or maybe not more vega, but there would be more premium to the backdated option. So even if you thought it was going to sit there, so I mean, there's certainly times where doing a calendar spread is a good trade. At least if you think silver's going to make a big move, I'm not sure that's the first one I would put on. But again, that's the thing. You can map out those different legs and see how things respond. But anyway, that's a comment on that.
We're going to get to one more question because this guy's a big follower of yours. He says he loves your work. Perhaps this is not a specific to silver, but do you have any comment on why the major miners, Barrick, Newmont, Franco, have not yet reached their May high? But GDX has broken through that. Any thoughts?
He's saying Barrick and Newmont are below their. Could you pull up a chart of that, Dimitri? Barrick or Newmont?
Barrick's Newmont's NEM, right?
Yeah.
NEM.
Newmont isn't back to its May high. I wouldn't have guessed that. But let's take.
So this one is close to its high, 70.
Yeah, no, it's
right there. 52 here. Yeah. What was the other stock?
The other was Barrick.
What's the symbol for
it? Chris, you know the symbol off the top of your head? I'll figure it out real quick. It's Barrick is gold, GOLD, maybe?
Gold, GOLD.
So, I mean, I can see what he's saying. It looks close. Maybe it's slightly above, but
like they're both.
Gold price is a bit higher. I guess the short answer is that things in the mining world, if you think that's, I mean, you can look at First Majestic. In fact, here's an interest to that point, not changing topics, but I was looking at First Majestic today, and I forget, I think silver at the end of the year was $18 and First Majestic was $12.41. Now silver is $24 and First Majestic's 60 cents higher. So, in First Majestic, there's also a really large short position. And I would suggest, we're talking about the most manipulated markets in the history of finance, possibly. So, and there's different profiles. I would certainly think that, based on, if gold moves up 100 or $200, probably whatever levels it was on those charts. I mean, it looks like Barrick is higher. Certainly it hasn't exploded as we've seen at times in the past. And I would suggest to not expect it to go on a linear, like gold moves up $100, it's going to move up X. You could say that it should, although perhaps a good way of phrasing it is that a lot of what's happening in these stocks, in fact, as more mainstream attention comes into it, the people pricing it are going to know far less than anyone listening here tonight. Or, it's like, look at what happened with the cryptos back in 2017 when the thing was rising. I mean, if it said coin in the name, I mean, it could have been, nothing to do with the crypto. And I think that's the kind of environment. And there'll be some days where it moves a lot more than you would expect. Some days it moves a lot less. I know there's, especially when you have your options on, and it can be, sometimes we can perceive it as frustrating. Although, Will, you asked if I had any parting thoughts. Maybe I would offer that I'm reading Phil Hellmuth, the poker brat, as he's known, and as his autobiography is called. And it's interesting how good he was at poker, skill-wise, and really the only thing that would throw him off was when he lost his cool. Now, certainly he's not the only one who fits that. I've lived that and spent, the last couple of years been dedicated to, addressing that. And, maybe somewhere in there's a lesson for option trading where some days it's going to go better than we think, some days less. But, if you back the math out and you put things on in a size that's appropriate, maybe just being calm, and some days, and letting the advantage of being the casino when the math is in your favor play out over time, and know how to take a step back. And the calmer we can be on these things, I think that's the rest. I mean, you don't even have to read the book. We've walked through it tonight. There's the basics. If you want, the book has more detail. That part's easy enough, but it's really just the mental side in any of these things that is what I've seen, what leads to success.
Wow, that's awesome, Chris. So big piece of advice, and we'll end the show on don't lose your cool. And more importantly, read Chris's book. I'll put that out on chat. We're going to email that out to all the chameleons tomorrow with a recap of the show with a link to Chris's book. Chris, thanks so much for being on. Dima, great job with the options as always.
Thanks, Chris. Thanks, Will. Thanks, everybody.
We have a morning show, Dimitri and I. Maybe one day you can join us on that morning show, Chris. Sure. Do a pre-market morning show, 9 o'clock tomorrow. Listen, anyone who is on tonight's show and watches the morning show tomorrow, let us know you watched Chris's show today, and we will get a free book out to you. Is that right, Chris? And
yeah, we'll send out the audio copy. I know that was what your brother requested, because that way he didn't actually have to like move the page and have his eye gloss over it. So yeah, we'll send out anyone that is a winner. I'll get them the audio copy, and maybe if we have, probably won't be too long, but one of these nights where if silver jumps up $1 or $2 in the middle of the night and you want to do the next morning, we could do something like that.
Oh, awesome. Would love that. All right, everyone. Thanks for joining us. Hit me up tomorrow morning on my morning show. Let me know you heard Chris today, and we'll have a little surprise for you. Dima, thank you. Chris, awesome. Everyone,
thank you, Chris.
Thanks for joining us,
guys.
Thanks, well, thanks, everyone. Have a good night.
Join us. Have a great trading week. Stay safe, everybody. Bye.
All right, so that is tonight's call. Thanks so much for being here with me. If you enjoyed this, go ahead, hit that subscription button and the notification bell. And also, I get a lot of emails asking about the options trading and different things that are available. We are setting up an email list, and if you send an email to support@Arcadia Economics, and say you would like to be added to our option list, then you can stay posted as soon as we do something like this again. Also working on a group program. I do some consultations on a limited basis, but sorting things out so we can have more things available going forward. So anyway, thanks for watching. And if you want to hear what Andrew McGuire said about silver earlier this week, if you haven't seen it, I think you'll enjoy it. It is coming your way now.